Welcome to Africa Business Weekly, your premier source for business news and analysis from across the continent. As we kick off a brand new year, 2025 already looks promising. An exciting time for African businesses, I must say. From the inauguration of US President Donald Trump to the World Economic Forum in Davos, Switzerland, this week's episode promises to be engaging as we bring you latest insights, trends, and interviews from the world of business, from East, West, and Southern Africa. I'm your host, Akin Obakeye. So let's get started with news from the southern part of the continent. Karabo Machaba is on standby for regional updates from South Africa. Hello, Karabo.
Greetings to you, Akin. In a landmark development, the African School of Governance Foundation has announced the establishment of the African School of Governance, a graduate institution dedicated to advancing a public policy education, research and engagement across the continent. CNBC Africa's Zanele Morrison spoke to Professor Kingsley Mugalu, the President and Vice-Chancellor of the ASG, on the importance of this development for the continent. Let's listen in.
The co-founders of the ASG, the African School of Governance, President Paul Kagame and the President of Rwanda and His Excellency Haile Mariam Desalegn, former Prime Minister of Ethiopia, have both identified governance as the biggest challenge the continent faces. We think many other things are our problem, but we don't realize that those things are problems because the foundational problem of competent, good governance and leadership in the continent has not yet been solved. That is what led to the establishment of the ASG, to create a pipeline for future leaders of our continent with the mindsets, with the knowledge, with the skills to tackle Africa's problems and its opportunities in the 21st century, and make the 21st century, in reality, an African century.
And I think I don't want to be presumptuous about what the focus is or what is the narrative that needs to be designed, because governance exists globally. How are we approaching the localization, the ownership, and the customization of governance for Africans by Africans?
This is a very important point, and it's a unique feature of the African School of Governance. We believe that at the ASG, we need to teach in Africa context-specific terms, that we need to create and drive an African narrative, an African worldview of confidence in the African identity. We need to move with the desire and the determination that Africa has good stories, homegrown innovations in governance that work, but are very too often not talked about. And we need to study these things, and we stop, using foreign solutions for African problems, which is the default position today. And I think that's one of the reasons the continent has a lot of governance issues. Our leadership, our spaces internally in our countries must be well governed before we can attract the kind of foreign investment, create the enabling business environment that will create prosperity in African countries and across the continent with the African Continental Free Trade Area.
Now, in delivering this, you've got a number of pillars that are going to be perhaps critical, and I can leave to you to unpack any of them. One is that leadership has to be resolved, because they are the implementers and the upholders of all that we see. And then you have the other component of research policy and the content that's going to back the decisions we make in governance. How are you going to manage these pillars, and what are your views on them?
Yes, in terms of leadership resolve, the ASG wants to train leaders that are purpose-driven, leadership with purpose. Leadership is not just a position. It's not a title. It's a vision, the motivation, the organization for human progress and for the progress of society. That's what leadership does. And sometimes you take risks, calculated and managed risks, in the process of driving forward. So that's what we mean when we talk about purpose-driven leaders, ethical leaders, values. And then, in terms of localizing things, our curriculum will study Africa's own context as much as we also try to understand and interpret the world through an African worldview. So the purpose is there. The curriculum that drives the teaching and the research will be very innovative.
Donald Trump's return to the White House as the 47th President of the United States was one of the biggest stories shaping this week's news agenda. My colleague Nastasia Aronsa spoke to Johan Els, Chief Economist at Old Mutual, as well as Martin Ackerman, the Chief Economist at Citadel. Let's listen in.
I think same person, but he is probably more ready for this, and I think the world is also more ready. So if we go back to 2016, a lot of the Trump policies back then was quite controversial. He walked into the White House on day one. He wasn't prepared whatsoever. He didn't even have a team to back him. If you compare it to what's been happening over the past couple of days, he's got a very solid team. He knows exactly what he wants to implement. And the world since 2016 to today is very different. We had COVID, we had a number of wars. So suddenly a lot of the Trump policies that he started back in 2016, like, bringing back production, supply diversification, a lot of countries are now adopting that. So it's not only a US kind of policy anymore. So countries all around the world realize that they need to rely on multiple sources of supply. So a lot of those policies are now more common, and therefore I think the world is more ready for Trump number 2.
Johan, building on what Martin is saying, that perhaps the world is ready for Trump 2.0, and he is, he's coming back. What kind of underlying working assumptions have you and the team discussed, especially when it comes to the Trump administration second time around?
The one thing that has become clear is that we have to wait and see a little bit, because not all of his bravado in terms of what he promised in the election campaign might come through in terms of actual policy. And we saw that yesterday as well when he was inaugurated, and in terms of the executive actions he signed. So there's lots of talk, and he's using a lot of that in terms of negotiation tactic. But of course, we know that even those talk and tactics that he used, even though it might not become policy, it impacts the markets. And that's what we've seen in terms of the significant strength, unexpected strength in the US dollar, because virtually nobody expected Trump to win, I suspect. So markets reacted on the promised policies. But as the Fed themselves said in November, they're going to wait and see until these policies are implemented. But then they backtracked a little bit in December because they started anticipating some of the inflation increases and building that into their forecast. So that's the type of uncertainty and volatility that we have to deal with. Lots of what he said yesterday in terms of tariffs against imports from Canada and Mexico might not happen. But it might. But certainly the world has moved on a little bit, even in China, where they've been able to diversify their exports quite a bit since 2016, 2017. Less of their exports now going to the US than back then. So the world is better able to handle this. But we still see the market impact. We saw currencies react in terms of the dollar strengthening. We might see this inflation coming stronger than expected because of the impact of tariffs. But again, we don't know. Lots of uncertainty, and I think that's the key point for investors.
And that's it from the Southern African region. It's back to you, Akin.
Thanks for the update there, Karabo. Let's now cross over to East Africa for more content from Tabitha Musoni. Take it away.
Thank you, Akin. Our momentum this week was heightened by US Trump's inauguration, with the key highlight being the ending of the so-called EV mandate. Trump aims to reduce government intervention and favor market-driven choices, prioritizing traditional gasoline-powered vehicles. However, Africa's leadership in designing a joint industrial policy could help address the implications for the continent's industrialization, trade, and energy transition. I spoke to Fadel Kaboub, who is the Associate Professor of Economics at Denison University and also author of Global South Perspectives on Substack, for more insights on this.
Well, what is happening right now is that you see very intense competition in the EV market and the high-tech and renewables and green technology market between China the European Union to some extent, and the United States. But what the Trump administration is doing is going back to the old technologies of the 20th century and giving up essentially its participation, its competition, and the technologies and the industries of the 21st century. That is the long-term impact of what the Trump administration is doing. So the long-term impact is actually damage to the US economy and serious advantages to the economies that will continue to leapfrog into the industries and the economies of the future. Therefore, for the African continent, the continent that has vast amounts of deposits of minerals and metals that are vital for the high-tech industry, for the green industries of the 21st century, this is a lifetime opportunity to finally escape the bottom of the value chain, which is the position that was imposed on us for a long time, since colonial times, to be the suppliers of raw materials of no value added content, essentially. The key here is to find the technological partners and to build a large block of African countries that are willing to co-design a joint industrial policy to prioritize manufacturing and deploying the building blocks of development and prosperity, starting with not the EV batteries for European producers, American producers, or Chinese producers, but to manufacture and deploy the renewable energy infrastructure to produce the electricity that we need in the first place, and to produce the battery storage capacity, not for EVs, but for our own economies. That is the missing piece. So complaining about the US giving up on green technologies and the fact that we'll be losing exports, so to speak, of raw materials is the wrong complaint. The complaint should be who is going to be our partner on the continent to co-design a joint industrial policy, because nobody on the African continent can industrialize by itself, because we need economies of scale. And number two, we need technological partners to share the technology, as in joint venture partnerships, in order to accelerate the manufacturing and deployment of renewable energy infrastructure, clean cooking infrastructure, clean transportation infrastructure to link our economies and to build the logistics of development and prosperity. So that is the opportunity. But the question is, do we have political leadership on the continent who is willing to convene serious conversations about regional industrial policies, joint industrial policies, rather than national industrial policies? Because when you do national industrial policy, you end up manufacturing a small component in somebody else's industrial policy, whether it's the US or China or the EU or any other major economic bloc.
In other major developments, Kenya and the UAE have signed the Comprehensive Economic Partnership Agreement, boosting trade, investment, and economic cooperation. The deal reinforces Kenya's role as a gateway to East and Southern Africa and aligns with its policy to reduce borrowing while attracting investment, foreign direct investment, and public-private partnerships. CNBC Africa's Flora Limoki spoke to Alfred Kombute, who is Kenya's Principal Secretary for Trade, for more details.
Kenya-UAE Comprehensive Economic Partnership Agreement is a milestone trade, investment, and economic cooperation agreement that has been arrived at between Kenya and the United Arab Emirates in order to foster more trade, to deepen the capabilities to invest in our economies more widely, and to cooperate on other areas such as logistics, trade in services, and also to deepen our ability to cooperate economically across various sectors. So this is a trade agreement that will make it more predictable for Kenyan goods and services to access the UAE market. Equally, it will provide predictable procedures for imports from the UAE and including investment activity.
And for a long time, Kenya and the UAE have been having economic trade ties for quite some time, but looking specifically at agricultural export-import markets. Talk to us about specific items that you're looking into within this new partnership this year.
So this is an extremely important partnership for both countries. Over the last decade, total trade between Kenya and the UAE has more than doubled from $1.4 billion to more than $3.3 billion. In the agricultural sector, the UAE has lots of promise for Kenya's export performance. We see sectors such as the meat and meat product sector, the horticultural sector, and even the cut flower sector are some of the key areas whereby having this agreement should be able to, over time, more than triple our exports. Kenya exports $140 million worth of meat products globally. $120 million of this goes to the Middle East, and of that, $80 million fully goes to the UAE. So the UAE does a lot of consumption of meat products, but it is also a transshipment hub for the rest of the Gulf, and therefore is an extremely important one for us.
That wraps up some of the key business developments from the East this week. Back to you, Akin.
Many thanks, Tabitha. CNBC Africa has been dishing out exclusive content from the World Economic Forum in Davos all week. And one of the interviews was with Nigeria's Foreign Affairs Minister, who was in speaking to Nigeria's recent membership as a BRICS partner, stating that the move remains strategic in its engagement with countries. Speaking on the sidelines of the 15th World Economic Forum, Tuga stressed that becoming a BRICS member is still work in progress. Take a listen.
In terms of networking, WEF is second to none. So that's why it's important for Nigeria to be present, to engage, and we've been doing that. So it's political engagement, it's of course also economic engagement, and especially since we have some would say an ambitious agenda, permanent seat in the United Nations Security Council, membership of G20. Recently, we announced partnership in BRICS, so we're a BRICS partner now. And of course, we are in the forefront of the push for a reform of the global financial architecture, and of course, also the political decision-making architecture.
So I imagine, as you say, sir, all the engagements that you've been having so far have been around those points, as you said, political and economic engagements. What has the reception been to the key stakeholders that you've been talking to?
Very, very good. This morning, I accompanied the Vice President of Nigeria, Kashim Shettima, to a breakfast meeting where you had political leaders, business leaders, and it was centered around the African Continental Free Trade Area. And you can see how central Nigeria is to that, because there was talk about the Pan-African payment system, which is a larger version of what we already have in Nigeria, which is the interbank settlement system, which was created as far back as 1997. And this has more or less facilitated the strong drive for fintech, the growth of fintech, and because settlement is in real time. So you can see the key role that Nigeria is playing. And if you look at the continent also, the Nigerian banks, almost every country you go to in Africa, you come across a Zenith, an Access Bank, a UBA, a GT Bank, and so forth. Dangote, Bua, Sahara. So we're actualizing that. And Nigeria is the largest market on the continent. And for us, commerce and trade is something that comes natural to us, because Nigeria was created out of that.
Sure.
It was created out of the interactions, the trade relations between peoples around the confluence of the rivers Niger and Benue.
So, sure.
Yeah.
So you touched on your recent membership as Nigeria as a partner country to the BRICS grouping. Why was that important for the country to take that step, and ultimately, what will it mean for Nigeria?
Well, to begin with, we already have very strong bilateral relations with the founding members of BRICS. And you can even see in terms of engagement, President Tinubu has visited Brazil recently. He's visited China recently, and the Chinese foreign minister, my counterpart, Wang Yi, visited Nigeria, met with me, met with President Tinubu at the beginning of the year, just a couple of weeks ago. India, before President Tinubu left for Brazil, for Rio, for the G20 summit, Prime Minister Modi visited him in Nigeria. So it goes. So it's important that we place ourselves in a position where when they take collective decisions, we're there to benefit, there to be a part of it, but without any of the challenges that maybe one may face if one, at this point in time, is a BRICS member country, full membership. So the partnership affords us all the benefits of membership before making that move. And of course, our approach has always been that of strategic autonomy. We engage as we see best with regards to our national interest. And of course, timing is very important as well. We have to look at the temporal side of things. But this announcement about the BRICS partnership has elicited all sorts of reactions. Some say, well, what's the point? Why BRICS partnership? Why not full membership?
Sure.
You should have been there. They don't realize that there's so many other considerations. Nigeria has so many overlapping relationships, and it will do what it deems best for its national interest.
In other developments, two major issues affecting telecommunications sector in Nigeria were addressed by the Nigerian Communications Commission: the lingering debts owed by banks to telcos for the unstructured supplementary service data code services, and the 50% hike in tariff. Tony Omokpere, president of the Association of Telecommunications Company of Nigeria, spoke to the significance of these decisions.
I'm not sure if that is totally the picture, because several banks have actually complied. So these 9 banks are actually not all the banks in the banking industry. Several banks have complied, and these are just the remaining banks that are still finding it a challenge to comply to the directive. And a joint circular was actually issued by the NCC and CBN in December last year, giving this directive for these banks to comply. As you know, this has been an ongoing negotiation for several years, and I think the directive came into play in December, and several other banks have complied. So I think we hope that these 9 banks will comply before the deadline, so that consumers are not disrupted from services that they render.
The talk suggests that there is a line of communication ongoing between all parties involved. Have these 9 banks offered any explanation as to why there's been a delay?
So far, nothing yet in particular has been mentioned, but I think some of these talks are still going on, between agencies. Okay, but like I said, several banks have already complied, right. And this is just the many of the banks that are still having this issue to comply.
Right, and now that the CBN and the NCC are involved, are you confident, that going forward that this issue will not arise again, that there will be a better communication channels and perhaps even a better system? The end user billing system, I believe, that's being proposed will put an end to this issue.
I believe so, because if you know, the circular that was circulated also had a framework for which this kind of bills will be generated and settled. So it's not just a circular to comply, but also a framework was put in place as regards to how banks will interact with the MNOs and ensure that this is a thing of the past. So once, I think the issue is just that the fact that this had been lying down for quite a number of years. So cumulatively is a big issue for some of these banks. But going forward, if these bills are settled as at when they are supposed to, it won't be something that will be so drastic, or any bank will feel such a big issue in paying this fees, so to speak.
Right. So hopefully this will be finally put to rest. Now let's talk about the telcos themselves. And of course, top issue that has dominated the headlines as far as telcos are concerned is the proposed tariff hike. Now, I wanted you to clear this up for us. What we've seen in the news is that telcos are proposing a 100% tariff hike, but we also know that the Minister of Communications and Innovation is proposing a 30 to 60% hike. So help us clear this up, help us understand which is it and what percentage of a hike telcos are proposing.
Well, ultimately, the rise will be what has been approved by the regulator and the government. So, in terms of what the percentage will be, we let us wait to see the outcome of all the engagements so far. Right now, the issue is that even on the back of the news that this is something that's in the offering. You could see from your news report, MTN just recently succeeded in their CP issue. So this is necessary for this industry to continue to thrive, and the industry continues to need positive news. The fact that tariffs are going to be increased at all, I think is good news. The percentages are still being discussed. I think that a study was supposed to have been put in place to check the effect of the increase. We have already clamored that this increase will happen within the first quarter of this year, so that some of these things will be able to benefit the consumer by the time the necessary infrastructural investment comes in on the back of the rise in tariffs.
And it's a wrap on this week's episode of Africa Business Weekly. Special thanks to my colleagues Karabu Mashaba and Tabitha Musoni for the regional update. Many thanks for watching. I am Akin Obakeye. Do enjoy your weekend.